Hello everyone, good afternoon. Today we're going to be going over the fourth week of June's price action and basically doing somewhat of a resume that I'm going to be making in a video and also annotating through Obsidian. Obsidian is a note-taking system per se, so we'll be doing that. And of course we'll begin with Monday, which was June 20th, where it took a few hours apparently. Had a pretty interesting price action. Guess we've not done that. And let's replay it back to this so we can be a little bit easier when analyzing this. Okay, so this is Obsidian and this is Chrome. All right. So let me lower the music because I don't want to go deaf. So, ICT says that we could trade from 10 to 10, sorry, from 7 to 10. That's the New York kill zone. And after that, we shouldn't really be trading unless we got news through the session, which would indicate that we have basically enough volatility to continue to trade after that. And that if we had news through the session, aggressive news that generated volatility, that would mean that we could trade up to 1130. But based on the backtesting that I've been making, not really backtesting, but just doing this, let me actually show you. I look at the kill zone in the session. I just went back and saw that, as you can see, this is up to 11, the box. So I'm basically seeing the price continues to move even though it's past 10 in most cases. There are some cases, example here, where it doesn't really do much. After 10 basically just continued going a bit lower and then it just ranges, right? But I've seen 11 to be fine, so that's just something that I'm going to start applying from next week. So what is it that we are, let me tell you what is it that we're looking for first, so we all are in the same page. Yeah, let's put it here. So we're looking for a move against the trend, run on BSL, SSL, aggression in the expected direction, creating FPGs, creation of FPGs in one direction that are later used through the New York session or something like that, in the timings from 7 to 8:30. So from 7 to 8:30, we're going to be looking for all that I just mentioned: a move against the trend, run to liquidity, aggression in the expected direction, and basically fair value gaps that we can later use on the opening, which is from 8:30 to 9:30. From 8:30 to 9:30, I want to find something that tells me what is likely going to be the direction of the session, right? So we usually see aggression in one direction that creates fair value gaps that are later traded into. Sometimes we have a run against the trend, which basically just generates liquidity. Generates liquidity, but manipulates people into believing that the session will be, I don't know, bullish or bearish, when it's actually going to be exactly the opposite. And in some cases, we see price retracing to a fair value gap created through this first phase per se that we have from 7 to 8:30, right? So that's exactly what we're going to be looking for. And yeah, that's really pretty much it. So this is Monday 20th. And this is exactly what we have. All right, so I have the let me actually hide this because we don't really need this. And kind of wanted to use what I had. I think it might be better to just go from scratch. Let's just leave it like this for now. So 7 is here. This is when we begin trading. And what is it? What is the price action that we're going to be looking for? Well, first, midnight session, we see that it ranges, aggressively goes higher, takes buy-side liquidity, aggressively lowers, sweeps liquidity from here, and then aggressively higher again, buy-side liquidity, immediate aggression generates 15-minute fair value gap. And what is it that we see? Well, we see price going lower, mitigating fair value gap in the 15, continues going lower, 5-minute generates a fair value gap, continues going lower. This is, we're already at 7. Look at how at 7, around 7, between 7 and 8:30. 8:30 is, let me actually see. This is the session opening. From 7 to 8:30, this is 7. It retraces against the trend, a tiny bit of a sweep on liquidity, here. And then we see the aggression just following the trend that we were kind of expecting based on the sweep on liquidity on the left and this sweep on liquidity. And what we see now, the aggression that generates fair value gaps. What fair value gaps? Well, it generates this one, there's an example of this. Apparently we have an entry. Let's go down to 1. So from 7 to 830, we generated this move, swept buy side liquidity, aggression generates fair value gap. There's another fair value gap in the lower time frame causing aggression, right? Aggression, how is it called? Displacement more than aggression. Price trades into it and continues going lower. Another fair value gap continues going lower, retraces into another 5-minute fair value gap. Aggression, look at the session opens. Why here? So the session opens here, trades aggressively higher, mitigating a fair value gap. So what is it that I mentioned earlier? We are going to see a move against the trend, a run on BSL, SSL, or as an example, one of them could be a retracement up or down to a fair value gap created through what I would call the phase 1, which is this, right? The from 7 to 830, right? From 7 to 830, we saw a retracement that swept liquidity, then aggression lower that generated a potential direction for us based on this, on the fair value gaps and the direction of that fair value gap and the aggression that we've seen. And 830 just retraces to a fair value gap. And what is it that it does? Aggression. What is it that I said that we should find around 830 on the opening? Well, this aggression to one direction that generates a fair value gap, that in this case we do. Price trades into that fair value gap, even trades into this tiny bit of a range, order the block potentially in the 5-minute. We see a little bit of a range, aggression that generates a fair value gap. Price trades into it, respects the high, and continues going lower aggressively. We have even another fair value gap here, well, here actually, that is traded into, and then just continues lower. What is it that we're aiming for? Well, this previous low that we have here to the left. So there we managed to take a sell following what we expected to be the trend. We could have even taken this one by understanding that, well, the trend is likely to be bearish. Why? Because we had midnight open aggressively higher, sweeping liquidity, then aggressively lower, generating fair value gaps that are later disrespected. But the thing is, what I've been trying to find is, so here's my problem. What I've realized was my problem with this is that I was forcing the direction given to me by either the daily chart or the midnight opening, or as an example, New York open. When actually just by basing myself on 7 to 830, 830 to 930, and well, then the rest of the session, I am more likely to have it a little bit more accurate. Right? Because when I base myself on the midnight opening, sometimes we're going to expect a bearish day, but we get a bullish day. Because as an example, I think it was 2 or 3 days of this week, you're going to see that the midnight open shows, well, not shows us, but tells us that it's likely to go in one direction and actually went completely against that. Right? And on the daily chart, we had that the weekly fair value gap was being mitigated, therefore we expect the price to go bearish, but it didn't. It did later than expected, but we could have traded against that direction because the market was telling us to, right? We had confluences that told us that price could go higher, so we can trade into that until price tells us that no, it's going lower, right? So from 7 to 8 to 10, we're going to be looking for opportunities. 7 to 11, in my opinion, is fine. And in this case, we would have managed to potentially trade this trade here. I did take this on paper trading, if I remember correctly, and potentially trade this based on the New York Open, which this one would have been just 4 hour, but this one would have been 8.5, and see how the trend then just changes. And I think that, yeah, as you can see, what do we see? We see a SSL being taken, run on SSL, aggression generates fair value gap, even a market shift up here, I think. Let me check. Yeah, market shift up here on this high, and we see the aggression, so price trades into that, and here we could have been looking for buys. Why? Well, because sell side liquidity was just taken, and we've seen a 5-minute market shift, 5-minute fair value gaps, so why wouldn't we trade in that direction? Right, so this as an example, this is something that I would have not considered. What is it that I would have looked for? Signs to sell. This market shift with aggression could have been traded to the downside, just looking for the continuation of the bearish trend given to us by the midnight session, by the buy side liquidity being taken, and well, all of this had happened already. But at the same time, sell side liquidity, which is the target in this case, would have been mitigated before the trend changes. So presumably we should have not been waiting for more bearish move than that, to be fully honest. So this is the 5-minute fair value gap. Price trades into that. What is it that we see here? Aggression, market shift, sweep on tiny lows, but it does sweep those lows. And basically we have this. Where's our stop loss? Down here, ranges, trades lower, sweeps the low, stop loss has to be down here, and then aggression higher, potential, another potential entry, in this fair value gap. What is that we're aiming for? Buy side liquidity, right? We have a couple of highs together here. Could have aimed for this one. Could have gone for this fair value gap that we have here. There are tons of targets that we could have targeted basically on this, and there's nothing that we can really do. This is the afternoon session, kind of. I did trade this, if I remember correctly, but no worries. We're not going to get into that. So I'm going to annotate things on Obsidian now. Actually, should make it a tiny bit cleaner. It's gonna be fine. And I'll be back in a sec. Okay, so I'm done with the resume of this day specifically. Have the screenshot, the run on BSL, run on SSL, run on BSL, the London kill zone, New York kill zone. This is pre-New York, in the middle of London. Basically, you can see the, well, actually, phase 1, move against the trend, run on tiny BSL, then aggression lower. Phase 2 is a tiny run against the trend, mitigation of phase 1 fair value gap, and aggression that generates fair value gaps. So we have session opening. Session trades into fair value gap here on the 5-minute, following the trend that we were given by phase 1. And then just mitigates into that. And this is where we got the entry on the 1-minute, right? Yeah. So this is trade 1. Based on through phase 1, right? And trade number 2 through phase 2, right? Mitigation of fair value gap, mitigates into that, aggression, fair value gap, entry, target independence, sales liquidity. We had clear phases that give us clear direction. It was simply following the fair value gaps created by P1 and the clear manipulation and aggression that occurred through phase 2. Right. So when I say phase 1 or phase 2, I'm not trying to change the strategy or anything like that. It's just a way that I understand a little bit easier, right? So for me, it's better to analyze it like this based on what I've been backtesting, and that's why I'm calling it that. So let's get back to this. We're gonna go to the 21st now, and we're gonna put. No, we're not gonna put nothing. 21st or 07, so we're gonna to 12. Actually, it's 14. Yeah. Where's my? Let's go to 15. Let's look at the price action that we have. I'll do the resume like this with you. Then I'll have to logically. Yeah, logically. Let's do it with that. This was a pretty shitty price action. So I have this. Yeah, okay, let's just do it with this. Midnight opens here, trades a bit lower, then aggressively higher, basically telling us that price could be bullish quite easily. We have a retracement through, well, after London, and we then begin into range, right? We get into range. So 7 to 10, we would have had nothing. 7 to 11, we would have managed to catch this. And as you can see, we have a run on SSL. This is the lowest point of this sell side liquidity, which are swapped by that week. Tiny, but enough. Sweeps that, and I think on the 1, we get clear aggression because it's a market shift on this high. We have the fair value gap, even 1 up here, trades into that, and then we see aggression up there. And what is it that we're aiming for the buy side liquidity, which the highest point is this, or at least the way that I drew it. Otherwise, would have been this, which is also mitigated. Could have gone all the way above that high, but thing is this, right? This somewhat of a block where price is just rejecting over and over again. So that's really pretty much it. We had a very shaded price action, price just range through the entire session. The way that I found to let's call it fight against it is that we usually will get a aggression to one side. As an example, we did get aggression to the downside here. This is session opening is where? This is the session. Trades aggressively lower, aggressively higher, sweeps a high, then aggressively lower. I'm definitely looking for sells here, but though there's no fair value gap in the 5. Aggression lower, continues creating that. And you can see how it mitigates into that and gives us, if I remember correctly, it does gives us an entry on that retracement, which is this. Yeah, we get a tiny bit of an aggression here, which is what I traded, and works for a tiny bit, but then completely fails. Goes higher, mitigates even a little bit further. This would have been potentially another entry, which in this case I didn't trade because I took this loss and I wanted to see something else clear because I started to realize that we have sell side liquidity, buy side liquidity, we have a lot of things. And price basically just went higher, traded into the high and aggressively lower, and when finally one low is swept, one side is swept, we see immediate aggression. We should have been a little bit sharp on trying to take this because it's not something that we had time to analyze. We're talking about sweeps liquidity, and 4 minutes later we're inside of the trade, right? Well, it could have been 7 minutes if we tried to enter in the second mitigation of the fair value gap, but that would have been, of course, a little bit risky because it might have not come back. And then the sell side does provide a run on BSL. 5 minute generates aggression that generates a fair value gap. Price trades into that. The 3 minute fair value gap is mitigated above this high, I believe, or this one, whichever it is. Well, actually, it has to be this one. No 1 minute fair value gap is traded here, but we have aggression, 1 minute fair value gap. That could have been an entry. What is that we're aiming for? 1 hour fair value gap. That actually creates a range, sweeps liquidity, and time many sweeps there that are later, well, that we are later targeting as this. If I remember correctly, I did take interest in that PM session after I took losses through this. So the resume of this is going to be hell. So yeah, I'm gonna pause and come back in a couple minutes. So finished with this resume on Tuesday. Half the day's price action, the New York kill zone, the London kill zone, midnight as well. Phase 1 move against the trend, tiny sweep. Prices you'll be able to see is basically ranging through the entire New York session, which we can see kind of here. But we do have that tiny bit of a move against the trend, then aggression lower, but it doesn't really generate much. It's even validated later. Phase 2, aggression generates fair value gaps, direction generates losses due to the price being in a range. Right, so what is it that we have? Session screenshot, buy side liquidity, sell side liquidity, move on both sides, first lower, then higher. So trade 1 happens at 10:30, run on SSL, 1 minute market shift, 1 minute fair value gap, and then the execution, which is what we talked about. Trade number 2 happens at 11:47, run on BSL, 5 minute fair value gap, 3 minute fair value gap, 1 minute fair value gap. So what I mean with that is that a 5 minute fair value gap was created after a run on buy side liquidity. Then the 3 minute fair value gap is mitigated here. That generates a 1 minute fair value gap, which would have been the entry. And well, it goes lower. Honestly, this would have been a little bit hard to catch, mostly because of the fact that it's very low. It's very low. And let me do this because I'm not gonna be able to multitask. It's very low, right? Because we're trying to find an entry up here. We have multiple fair value gaps in the 1 minute that were just not mitigated, right? And what I want to check is, does the 5 minute even generate a fair value gap in that? Yeah, it even generates a fair value gap. So I would have expected this to be mitigated, and I don't really think I would have gone for the 3 minute that then generates a 1 minute. Because that would have been me trusting the stop loss up to this, which is literally the open of a fair value gap in the 5. So would have been a little bit of a difficult trade. Could have been traded because we do have the reasons to do that, but still, just a tiny bit risky. Okay, we can delete this already. And actually, Let's just delete the entire week analysis so we can later on get to that. So, okay, now to the 22nd. 0, 0, oops, 0, 0, where did it go? And 14. Yeah, 15, 0, 0, 2. Let's actually just look at the price action we've got already. 22nd. Okay, so we have a trade here that apparently could have gotten all the way up here. 11R. So 0, 0 begins here. Well, it's in Spanish, but midnight goes lower aggressively again. We have previous day's low, liquidity from this point, all swept by this. 7 begins exactly here. Sorry. Price has been pushing higher. We have a sweep on buy side liquidity as well. We have these equal highs, or relatively equal highs, still pending. We have a little bit of a range, and as soon as 7 a.m. begins, trades against the move, or sorry, trades against the trend, the current trend, run against the trend. And then we see aggression higher, a little bit of a retracement through the session opening, and then the continuation higher. So let's go to the 5 to see this. So 7 a.m. we see clearly the move against the trend. What does it do? Well, first swap buys out liquidity, which apparently we got an entry here in lower time frames. We have a 5-minute fair value gap, but also we have sell side liquidity being swept, which is this lows here and the ones that were created here. Trades lower, takes that. We see a tiny bit of aggression, not much fair value gaps. Apparently in the 1 minute we do get an entry. We'll see that. Yeah, session opens, retraces a bit, probably mitigate something in here, sweeps a tiny bit of liquidity from those lows, and then we see aggression higher, 15-minute fair value gap, 5-minute fair value gap, potential entries to trade up to this. So we'll try to get to analyze that. So let's just get to the 1. So it looks like a really cool and clean day, not gonna lie. I'm guessing a 4, 3, or 2 minute fair value gap on this. Let's go to a 4. I don't think the 4 had time to create that. Oh, actually it did. Oh no. Well, it did, yes. Fair value gap here. Later traded into it. 3 minute. This is a 3 minute thing. Trades into that. 2 minute has 1 as well, but it's lower. Is it mitigated later? No. So we have a 2 minute, a 3 minute, sorry, 4 minute, 3 minute that both are mitigated. One mitigated here, which is the 3, and the other one, the 4, was mitigated here with the manipulation of the New York session, right? So let's go back to the 1. 15-minute fair value gap up here. What does it do? What does it give us? Does it give us anything? Mitigates it here, or is this the close? I'm gonna guess this is the close because it's 19. Oh, actually, no, it can't be the close. So what's the close? It has to be the close. Would it might be this one. So it trades into this. Tiny bit of aggression there. This could have been an entry. It's a little bit high, but this could have been an entry. Then trades into that. We see aggression higher. No fair value gaps to trade. 5-minute fair value gaps. Trades into that. Tiny bit of aggression. Fails. Sweeps liquidity. More aggression. Entry. Stop loss below this low is aggressive. Below this low is conservative. Then we get another one, but it's just not traded into. We're going for this high. That's 3.8 or 2. Actually 3 exactly. Okay, so out of this, the only entry that we could have gotten into is this, unless we would have gone for this 3 minute, which is a bit aggressive, but definitely possible. I actually do remember I took a market execution with this, with paper trading, but ended up closing in break even or in a tiny bit of a loss due to this, because I saw this 5-minute fair value gap being respected, created an aggression, and well, that was just a little bit of a bad analysis in that. But this is the entry that we were discussing earlier. We have 7 a.m. We understand that 7 a.m., knowing what happens between 7 to 8:30, or what could happen, or what's likely to happen, we understand that it's likely to go against the trend. So if we have a sweep higher, which is the trend, we have buy-side liquidity being taken right away. and then we have sell-side liquidity pending, that will be the move against the trend that we're expecting. So this is definitely something that we could have tried to take advantage of, going against the trend, but knowing or understanding that that's a probability based on history, right? All of the things that I'm saying here is based on history, right? So phase one, phase two, I'm not trying to change the strategy or anything else. I've said this already. I'm just trying to say it or understand it in a way that I personally understand it, right? So by partitioning price in these 2 or 3 phases that I've kind of been studying, I realized that, well, from in phase one, we're likely to expect this, to then phase two, do probably this, right? So basically in phase one, I'm expecting a move against the trend. I'm expecting sell side liquidity to be taken. I'm expecting aggression to the expected direction that generates fair value gaps for phase two to trade into it. So having all of that in my mind, I do expect price to go against the trend at some point from 7 to 830. We do get that, and why would have I expected it to happen from here? Because it's swept buy side liquidity, and we see immediate aggression that generates a fair value gap in the 1 minute that could have been traded. Is this aggressive? It definitely is, but it's a pretty simple trade that could have given us a couple of good hours as soon as we get into the session. Well, not as soon because it's 7:30, right? But you know what I mean. So then we get the other entry that presumably is in favor of the trend that we are expecting. We see the aggression on the New York session going against that, and then we'll, through what I would call phase three, is just following that trend, looking for higher time frame fair value gaps to looking for fair value gaps in higher time frames to then trade on the lower time frames if they generate fair value gaps, right? Simple as that. So yeah, I'm gonna do the resume for the Obsidian now, and we'll see what we can get out of it. Okay, so I don't really remember if I showed Wednesday, but this is what we got. Analysis of the sessions, phase one, phase two, session screenshot, have a little bit of information. Trade number one is a loss. Trade number two is based on this, as you can see here. Trade number two would have been just this entry here, which would have ended up in a loss. The conclusion, you can read. And well, let's just get to Thursday, 23rd. Okay. So we have, oh, I actually have to get there first. 23rd, I said. 23rd it is. I'm gonna go back to 2 p.m. as we've been doing, approximately. This was actually a pretty interesting day, because as you can see, the session started all the way up there. And this is actually a very interesting day to talk about. I don't really have much, so I'm just gonna do the analysis from scratch. And in the meantime, we'll do the resume for Obsidian. So these are the timings that I want to be aware of. We'll put the kill zones and stuff. Keep in mind that this is to 11 again, not to 10. So the reason why I say it was interesting is because we have the opening is this. Trades a bit lower, higher, doesn't really move much, then aggressively lower, sweeping liquidity lower, aggressively higher, sweeping liquidity higher, and then we have this through the London session, right? So what is it obvious that I'm going to think about this? Run on BSL, manipulation through the open on midnight, and a bearish continuation. So when we get into the charts at 7, we see price just we had a major impulse, so we are expecting price to go a bit higher to then continue to go lower. So what is my bias for the day? My bias bearish. I'm definitely gonna expect bearish momentum, bearish continuation, well, I guess to this low, right? Maybe. So having that in mind, we have that this is the London price action, this is the New York price action. What is it that we're going to expect from 7 to 830? From 7 to 830, we want to see a move against the trend, which theoretically should be higher to then go lower. No need to sweep liquidity, no need to cause a market shift or anything like that, but we need a move against that trend for it to do something against the trend. Do we get that? We kind of do with this move up here, then a bearish continuation that fails immediately. Then we have this major move up, and at 8:30 we get a move lower. So let's go to the 5 where we'll be able to see it better. And from the 5, I think the 5 is actually a pretty good time frame because it allows us to trade in short term. It allows us to analyze what's really going on, where's the liquidity hanging and everything. But we do still need the 15. But what I'm trying to say here is that the 5 clear things up a lot compared to what we have in the 15. Because now in the 5, what is it that we have? Price opens, trades a bit lower. Sorry, not opens, begins 7 a.m. Goes a bit lower, then aggressively higher. We have a tiny bit of a sweep here. Aggression lower, sorry. And how do we determine the direction for this? So midnight in London is telling us that the direction is bearish. Why? Due to the liquidity sweep and the aggression on the move to the downside. So because of that, we understand that price could definitely continue to be bearish. But this is the reason today, or not today, Thursday, and I think if I remember correctly, Friday as well, the reason why I ended up making all of the backtesting that I did through, well, Friday and Saturday, to try to determine how can I understand the potential bias, or how can I take trades without really depending on what the 8:30 mark specifically does, or the midnight mark specifically does, right? So what is it that we have here? Well, we had a little bit of a move higher in the 15 minutes, in the opening of 7 to 8:30. A little bit of a move higher, then a little bit of an aggressive move lower, which generates fair value gaps, trades higher, but it doesn't react to this. We don't see a reaction. So what is it that we have? We have liquidity here, and even back here, as you can see in this candle, we have a couple of lows that in the 1 minute are a little bit better or easier to see. And we have two ways to see this, because the move against the trend could have been both. This could have been the move against the trend, the higher move, or the lower move could have been the move against the trend. So we have buy side liquidity being taken, sell side liquidity being taken, and then we have this aggressive move higher, which by 8:30, which is this candle, it goes above a high, causing what? Well, it causes a market shift in the 5. It causes a sweep on liquidity as well, of course. But also we come from sweeping sell side liquidity. So at this point, we have both sides. And this is my, not my problem, but what I found to be a little bit of my mistake on this day specifically, and in others, as you'll see later. Let's go to the 15 first. And let me do this, because ICT said that target can be many. We can target liquidity, we can target fair value gaps, we can target premium and discount. And in this case, the one that worked out the best was the fact that we have the 50% here that has basically a 15-minute fair value gap, which is there. So let's say we want to target that. That's our premium and discount target, along with the fair value gap in the 5. So, no, not the 1. So what we get, 8:30 trades aggressively lower, generating a fair value gap. And we have to remember that phase 1 also created fair value gaps to the upside after sweeping liquidity down. So we have sell side liquidity being swept, aggression to the upside that generates fair value gaps in the 5 right after a sweep on liquidity. Oh, and a market shift as well, right? So that does tell us a lot about what we could see after this, but both sides make sense, right? So let's see what we have here. We have, this is the bearish fair value gap, right? Yeah, let's just check. Let's not say nonsense. Yeah, bearish fair value gap, and we have another one up there. Actually, this is not the one that I wanted to show. Okay, yeah, I thought something was not working there. Okay, so price, let's look at what happens. So we had a market shift. That's something obvious, but at the same time, we have had a sweep on liquidity. We had a sweep on liquidity on this side, sweep on liquidity on this side, fair value gap from this side, fair value gap from this side as well. This one fails. Sorry, this fair value gaps fail. Sweep on liquidity. These fair value gap, they don't cause a reaction, so that's not an entry for us, and they fail as well. So what is it that we have? Sell side liquidity being swept, aggression to the upside that generates fair value gaps. 5-minute market shift. Direction, we don't really know. Midnight tells us bearish due to the buy side liquidity being swept and their aggression through London. But price right now is telling us that it could go higher. The price action that we're seeing is telling us that it could go higher based on sell side liquidity being swept, aggression to the upside on the 5 minute that caused a market shift and created fair value gaps, and price trades into that. What is it that we have? Buy side liquidity being taken, 5 minute created a fair value gap. Look at what happens. We have first sell side is actually buy side is mitigated first. Gets into this. We have a market shift. I don't remember. Let's actually take the replay out of this because I want to see if it actually had a fair value gap or not. No, it didn't. That's a shame. Oh, actually, is this the day where? Because there was a day where I didn't see any fair value gaps to trade, but I didn't go through time frames. Well, we have a fair value gap on that, but I'm trying to find something a bit lower. Nothing in the 3, nothing in the 2, no. Okay, so let's just go back to the 1. So we have price mitigates the bullish fair value gap, causes aggression, market shift, no fair value gap to trade, continues with the aggression. This is the first fair value gap, which is actually not traded, of course. Now at this point, we have to look for fair value gaps in the 4, the 3 minutes, the 2 minute as well. Price just continues going higher. Do we see any aggression in the 1 minute, maybe a market shift, maybe a fair value gap to the downside after mitigating this bearish 5 minute fair value gap? We don't. So that means that price now is likely to continue bullish, at least for now, right? What is it that we have to do? Well, we just continue doing what we're doing. We found 5 minute fair value gap that was respected and continued with the trend. Now, probably there are other fair value gaps to trading this. We have one here that is traded. So let's see what we can get out of that one. Price trades into the 5 minute fair value gap. Right on this mitigation, we have aggression, no fair value gap. This is the fair value gap that we see. First entry. Well, I don't know if first entry, but definitely first trade that we can find. Our stop loss aggressively below this low, conservatively below this low. All right, so on this case, we would have been fine with this move here. On this case, we would have been actually out of the market, right, on the lower. So price continues going higher. Supposedly, this is our target, right? So that would have been difficult because we're pretty close to that, and it's potentially less than a 1 to a 2. There was, if I remember correctly, tiny bit of a fair value gap in here. Yeah, that was traded between these two candles. You can see first candle, second, third. Mitigated, continues with the trend. Could have we traded that? Yeah, I would have been aggressive and a bit complicated to take that specifically, but definitely could have been traded. So it's an opportunity that we have to consider. And stop loss should have been down here, so we would have been safe on this, unless of course we moved our stop loss. Did we have any kind of reason to try and sell so far? No, not really. Now, what happens later is interesting because of course we have mitigated fair value gap on the 15, right? What is that we see? We see aggression lower generates fair value gaps in the 5. Fair value gaps we have on the left as well, which are somewhat respected. But when price gets up here, we have fair value gap in the 5. Price trades into that. And what do we get? The 1 minute mitigates it, sweeps a bit of liquidity, this high, and this high, so we have here, right? Trades into that, aggression lower, tiny bit of a fair value gap that is traded into. You don't see it, you can zoom in. This is the high, this is the low. Trades into it, stop loss above the high, and works lovely. Maybe could have tried to target this, the 12 of the liquidity that was being formed. See how many mitigations we've had around that level. Have 1, 2, 3, 4, 5. potentially 6, right? So yeah, definitely a pretty good target in my opinion. And that would have been fine for the afternoon session, although this is actually from 11 to 12, so it's an hour of price action. I do see a little bit of aggression here in the 1 that with the stop loss up here would have worked. Probably a fair value gap in the 5. But yeah, that's pretty much Thursday. It was a day where it would have been complicated. It was complicated for me because I was forcing the direction given to me by the midnight open, right? And even the New York opened right after a strip on liquidity and aggression lower, so I'm definitely going to be looking for sells. But we didn't really get confluences to sell, or enough confluences to sell. Therefore, we just don't have any kind of entries. So that's Thursday. I'm going to make the resume on Obsidian now, and I'll be back in just a minute. All right, let's now continue to Friday, last day of the week. I will show later the results on Obsidian. But let's just get straight into this interesting day as well. Because as you can see, price swept, and then went for sell side liquidity, although it didn't get as far as I thought it might. But it was a very interesting session, as you will be able to see. And let's put that. No, that's fine. Okay, so midnight here. What does midnight do? Let's just watch this price action as it is. Midnight opens, starts trading higher, then somewhat aggressively lower. It doesn't really create fair value gaps in the 15. Lower, swept some liquidity. Wouldn't say swept a lot, but we do have these couple of lows here. So let's call it run on SSL. Swift liquidity. London was bearish, then bullish aggressively. What do we have up here? We have a buy side liquidity being swept. And let's put this in the meantime. London K was K said, and New York, which we know is up to 11. So what happens after this? The BSL being swept goes lower through, well, the betweens of the London and New York kill zones. It goes lower, 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 lower. What do we have from 7 to 830? We have price running on SSL. Just other of the things that we can find through this time frame. And what is that we get after the swap? The sweep, aggression to the upside. Session begins here. Session manipulates lower, mitigates something in here, potentially the order block, and aggressively goes higher. What could we aim for? Buy side liquidity above this high. Or, as we did on the previous, 50% of this move, some fair value gap, which in the 5 there's none, but doesn't really matter. Let's go to the 1 minute and the New York kill zone. So what is it that we have? Price, again, 7 a.m. begins here, continues going lower. We have sell side liquidity, sweeps that, immediate aggression, generates 1 minute fair value gap. Price goes higher, ranges a bit. We have 830 is exactly here. Right here, goes aggressively lower, aggressively higher, sweeps liquidity, aggressively lower, lower, respects this low. That means that any fair value gap that was created on this push higher was respected. We see aggression. No fair value, this is actually the day that I remember, or the trade that I remembered, because there's no fair value gap in the 1, but the 4 minute and I think the 3 as well had an entry on this first action. So let's look at that. Let's look at the 5 first, which is what I probably should have done. And look at what from 7 to 830, which is 830 is this. We have price going aggressively lower, sell side liquidity being taken, and then aggressively higher. That's phase 1. Phase 2 trades against that, then in favor of that, then against that aggressively. This could have been us looking for opportunities. But what's happening here? There's a fair value gap in the 5 minute here, generated after sell side liquidity was swept. What did the 7 a.m. move do? It ran to sell side liquidity. Not only that, but also potential move against the trend. It could be considered like that because, well, if we are expecting a move against the trend or sell side being taken, this could be considered a move against the trend. It's a little bit considering too much, right? But at the end of the day, it is what happened. Then aggressively higher fair value gap, trades into the lower one, even the order block in the 5, respects that, aggression, 5-minute fair value gap, continuation, more fair value gaps that are potentially traded into later. But let's look at this specifically. Have the 5-minute fair value gap here. And we have the 5-minute fair value gap on this as well. I think we do get an entry on that. And this is the 4-minute or the fair value gap that I was talking about. The 3-minute does have one, but it's very tiny, so let's just ignore that one. 2-minute does have another one, another good one as well. I will go with the 5, just like this. Let's go to the 1-minute again. So New York opens aggressively lower, then aggressively higher, swaps liquidity, aggressively lower. We basically have a range here. That's why the 1 minute sometimes is a little bit tricky. We don't really want to spend too much time in here. We spend most of our time in the 15 trying to figure out a direction, 5-minute as well. But the 5-minute will likely give us more POIs to look at, right? To then look at the 1 minute when price trades into that, which would have been this case. So we have the 5-minute bearish fair value gap up there, have the 5-minute fair value gap here. Trades into that, we see aggression immediately, no fair value gap in the 1 minute. When this happens, that's when we start looking into other time frames, as there's more time on this move, so more candles in other time frames could have been created. Because in this move, we can say that only there's one 3-minute candle, but on this one we could say that there's probably 3, maybe 2, 2.5, something like that. So in this case we did have another fair value gap, which in this case was the 4-minute. Price aggressively trades into that, and actually when it trades aggressively higher, that's when we identify the fair value gap. That's our entry. And when it mitigates this, are we going to be looking for sells? I don't think we should. We do get an entry, right? Because this is the fair value gap in the 1 minute. You can see how it mitigates that. Barely, but it does. And then aggressively moves lower, which even generates another POI or another entry per se. But what have we just swept? Did this move here aggressively lower in the 5 minutes sweep liquidity? It didn't. It did sweep a tiny bit of a high here, and then aggressively went lower, generated 5-minute fair value gap. But the other side, this side, swept important liquidity. 5-minute generated fair value gaps and aggression. 2 fair value gaps in the 5. Remember, we had one up here. Price trades lower into that, and we see aggression again, generating a bullish opportunity, right? So could have we tried to sell? Yes, sure. Let's suppose we took the sell. Could have ended up in a loss, very likely. But we should have taken this as well. Stop loss, of course, has to be all the way down here. We're targeting all the way up there. Not sure if it's the greatest trade we can find, but definitely a good couple of hours to finish off the week. 4.29. Right, maybe -1 on this sell. But again, direction in my opinion was quite clear in this case, but we just would have had to identify how the 5-minute swap liquidity then continued higher, creating those opportunities. Also, again, phase 1, phase 2, and that's all. That's all for this week. It was honestly really interesting looking at this. Really interested looking at this because so I didn't look into this price action. I looked at the past month or so of price action to see if my theory or the way that I wanted to apply these concepts, it was a good way to apply them. So I checked almost the entire month of June and a little bit of May, right? And it was honestly very interesting to see how it repeated, how what I said about phase 1, phase 2, it repeats over and over. And I kind of set a number on my notes. I think this repeats the phase 1 and phase 2 thing kind of repeats like a 90% of the times, or 90% of the times it works based on what we got on phase 1 and phase 2. But on the other side, the rest, the 10%, usually happens, or that 10% that doesn't work, it's usually when prices ranges, right? Because it just ranges, the first direction is wrong, the second direction is wrong, and then that's it. You know, you just can't really do much about that. Those are days that we just can't really trade or really just do anything about it, right? So 90% of the times, in my opinion, this repeats. What do you mean with this repeats? The phase 1 will cause something that tells us, yes, price could continue lower, price could continue bearish, or bullish, depending. And let me show you this. Okay, this is basically the plan. Phase 1, this is exactly what I want to see. Some of this, not some actually, just one is going to be enough because I understand what's going on with that. And then in phase 2, I want to see this, right? Something that tells me the direction. And if you go to your charts, this is exactly how I determine this was something of interest or something that potentially repeats itself. All that I really did was go to the 5 or the 15. I don't really remember what I used, but I'm pretty sure it was the 5. Use both of these, which, if you ask me the real name, can't I find the ones that I'm using? Okay, so KC boxes, does that work? ICT KC box, I think this is the one. Yeah, this is the one. 1800 downloads or users, however you want to call it. Right, and the other one, I have no idea how I looked it up, so that's gonna be a little bit difficult. But sessions probably. I think this is the one. Yeah, this is the one. Okay, so bidas.multi, something like that, 1300 downloads. And the way that I configured it was just going here. I don't want Asia, I don't want London, just want New York, and I was able to configure it so it's not this one then, because look at how, yeah, this one has the time. So I set it to 8:15 to 8:45 to see the actual open, the 8:30 mark, right? Because I want to see exactly what happens from this point and after this point and everything. So yeah, so I had this too, and I said, well, we have 7 opening there, goes against the trend. 8:30 goes goes against the trend, swaps liquidity, goes higher aggressively. New York comes back down to P1, to a fair value gap in P1, and just continues higher, right? And then I looked at this one. What is it that we have? Well, P1 swept liquidity higher, swept liquidity lower. P2 just continued a bit with the move, then went down to a fair value gap in the P1, right? And exactly like that with every single one. Move against the trend, fair value gap in P1, respect that it continues higher. This is a rangy day. We did get opportunities in this, as we were able to see, but this one would have been one of those days that, in my opinion, just didn't work out. I wouldn't really look too much into it. I didn't when I did the study per se. I did in the resume because, well, I'm resuming the entire week, so I have to find out what happened, but it doesn't really matter for me. Again, with this one, what do we have? Move against the trend, aggression lower. 8:30 just aggressively goes lower, so that we already have a direction. What is that we have back here? Fair value gap from P1, respected, continues lower. That's exactly how I did it, or how I realized that this is something that repeats itself. So I wanted to see something from 7 to 8:30 happening that told me maybe what the direction could be, and from that I will go more into specifics. What is it exactly that happens? What is it? Do we have always a sweep on liquidity? Do we need a sweep on liquidity? Do we need aggression through the session opening or the midnight or something? And I honestly, as you were able to see, I was just using the sessions, the kill zone and the opening. That's really all that I was actually using, because I kind of don't want to depend entirely on what midnight did, because as you were able to see in most of these days, we actually didn't really get much information from midnight. Midnight in this case, maybe based on everything that we have, we could have expected a very smooth, at least down to this, and maybe then bullish up to this. Honestly, it would have been a little bit difficult to determine the bias based on midnight or even the New York Open, but basically what I was trying to make out of this weekend was exactly that. Try to determine how can we understand the bias for the session or the day without really caring that much specifically what happens on the Open or midnight. Because in some cases, the Open treats aggressively lower, and that doesn't mean that it's going to be a bullish day or a bearish day either. But what happens with that move is what matters, right? Do we have fair value gaps? Do we have a sweep on liquidity? What happened through phase one, etc., right? So that was pretty much it. Hope this video was of use to everyone. I'm actually going to show Thursday, which I forgot to. Didn't forget, but you know what I mean. And Thursday, this is Wednesday, this is Thursday. This is the screenshot on the kill zone, New York kill zone. You can see the tiny bit of an explanation here. Phase one has exactly this, which later I can compare with what I had on my notes to see if things repeated or if I have something missing on my notes. This is how phase two worked out, which was a little bit complicated in this case, although not that much. And then we have the session screenshot, the entire session with, of course, explanations. Trade number one, fair value gap in the 5 minute, mitigates it with the potential entry here. Forgot to mention this one, should have probably added, but I can see it here. Probably remember, could add it later. And then the conclusion, which, yeah, that's really all that I wanted to talk about here. Hope you enjoyed it. Hope you took something away from it. I've been seeing you on to the next one.